It's Friday, the 12th of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
An incredible day on the market for miners. That's our main story. Also this morning, the unemployment rate surges, the cost of COVID on business emerges, and Elon Musk sells $5 billion worth of Tesla shares and still has $195 billion in shares left. Then stay listening for Sean's chat to Patrick Coughlin from Creditor Watch about what sectors are most at risk of insolvencies. And just before we get going, a quick plug for the Fear and Greed newsletter. If you haven't signed up, make today the day. Head to fearandgreed.com.au and join in. It's completely free, and every weekday morning you'll get an email with a quick guide to the top stories, as well as a few other bits and pieces that we think you might like. But first, Sean, what a day to be a miner. Big share price rises for all sorts of different reasons. Fortescue Metals was up 8.2%. The battery metals companies did well. So too the iron ore companies.
Yeah, quite an incredible day, but definitely the standout was Fortescue Metals. That was in part because Chief Executive Elizabeth Gaines said Fortescue Future Industries, that's the company's green initiative, had a pot of unspent money for renewable projects. The group plans to spend about $800 million in clean energy projects this year. Now, some were concerned that the slump in iron ore prices that we've seen in recent weeks might mean Fortescue Future Industries may not eventuate. But the news that there's money set aside certainly pleased investors. It just demonstrates how hot anything related to climate change initiatives are at the moment. We've already seen that this week in Chalice Mining. Remember, on Tuesday, it said it had made the biggest nickel discovery in Australian history. Nickel is critical in electric vehicles and lithium batteries. Since the announcement, Chalice's share price is up 45%, including almost 10% yesterday. The other battery metals companies just keep roaring ahead. Lithium producer Pilbara Minerals is up 400% over the past year, including a couple of percent yesterday. Orocobre, Lynas Rare Earths, Iluka, they've all been standouts. Fortescue also got a bit of help yesterday from higher iron ore futures. That boosted BHP as well, which finished up 2.3%, and Rio Tinto closed 2.2% higher.
The other sector, Sean, that got a kick along yesterday, a real kick along, was the gold stocks.
Yeah, it sure did. And that's because of much higher than expected inflation figures in the US. That came out on Wednesday night. Now, consumer prices in the world's biggest economy during October were 6.2% higher than a year earlier. That meant people went looking for gold. Remember, gold is a store of value. So if investors think inflation is rising, they buy gold, its price rises, as does the share price of the gold companies. Yesterday, Regis Resources was up more than 7%, Evolution Mining was up nearly 5%, Northern Star was up 4.5%, and market leader Newcrest Mining finished more than 2% higher. Michael, it was a very, very good day to be a miner.
It sure was. What happened, though, away from the mining sector?
Well, the S&P ASX 200 actually closed down 0.6%, to 7,382 points. That just shows how well the miners did. There were some big drops among the large caps. CSL was off 2.4%, National Australia Bank was down 1.6%, and Wesfarmers was off 1.4%. Afterpay, Woodside Petroleum and James Hardie Industries all lost 2% or more. It just shows how broad-based outside the miners the market fell. One notable on the top 200 was aerial mapping group Nearmap. Its share price tumbled more than 12% after it said it would spend $30 million in cash this financial year to support growth. That is a big drop.
Yeah, certainly is. What happened in overseas markets? What's happened overnight?
Well, Wall Street rose, recovering somewhat from yesterday's sell-off following those high inflation figures in the US, but there wasn't a lot of energy in the market. European markets were also higher. They're trading around record levels at the moment. London's FTSE was up after figures showed the British economy grew by 1.3% last quarter. Gold rose again, pushing above $1,860 an ounce. That's its highest level since mid-June. And the Aussie dollar is worth a touch under 73 US cents.
We'll be back in a moment with the rest of the day's business news. Sean, the unemployment rate jumped to 5.2% last month, really surprising economists.
Yes, it did. It rose from 4.6% in September. Whereas market economists expected about 50,000 new jobs across the country last month, there was actually a 46,000 drop in positions. But these numbers are a bit messy and definitely difficult to read. Firstly, the Bureau of Statistics sample period was actually towards the end of August and early September, rather than the first 2 weeks of the month, as is usual. That means the impact of the reopening in New South Wales was somewhat missed. There was still an increase in employment in that state, whereas Victoria, which was in lockdown, lost about 50,000 positions. Also, the participation rate rose, which boosted the unemployment rate. A higher participation rate is actually good news, Michael, since people want to go back to work, and I suspect that rate will keep climbing in coming months. Now, Federal Treasurer Josh Frydenberg, speaking after the figures were released, said lockdowns cost jobs and were detrimental to the labour market. We all know that. But there was good reason to be optimistic about the future.
Okay, so in summary, what's it all actually mean?
Bottom line, the employment market is in okay shape. The number of jobs is still lower than pre-Delta levels, and the unemployment rate is now a fair bit higher than pre-COVID. But job vacancies are very high, economies are reopening, job losses this year are way below last year. We might get some choppy numbers in coming months, but the labour market is going in the right direction.
Okay, good news. The COVID case numbers, Sean, in New South Wales and Victoria were higher yesterday.
Yes, they were. Victoria reported 1,313 new cases and 4 deaths yesterday. The state's full vaccination rate is now 85%. Well done, Victoria. New South Wales recorded 261 new cases and said over 90% of its residents are fully vaccinated. However, there is a possibility of new restrictions in Queensland after 2 unlinked cases were recorded in the Sunshine State. Australia has now administered 37.2 million vaccine doses, and across the country, nearly 90% of adults aged 16 years and older have had a first dose, and more than 81% are fully vaccinated. I reckon they're great numbers, Michael.
They certainly are. I agree with you on that. Now, it is AGM season, which I bizarrely really enjoy because we get a bit of a peek into how companies are performing. And this time, there's plenty of chat about how COVID has impacted business and the bottom line.
Sure is. Flight Centre Travel Group is an interesting one. It's one of the companies most affected by the pandemic, and Flight Centre yesterday said it had received a total of $248 million in wage subsidies under the federal government's JobKeeper program. That's massive. It includes $152 million last financial year. However, when you take into account that the group lost more than $1 billion during the last 2 financial years, maybe that $248 million isn't that much. At least it's still going. Another one was retailer Sephora, which is owned by French luxury giant LVMH. It had big plans to roll out more stores in Australia, but these are now on hold due to slow sales during the pandemic. Sephora has 21 stores in Australia, but it won't be opening any more in the short term. Now, Sephora said it received about $8.5 million in JobKeeper payments. Ramsay Health Care, it updated the market yesterday saying elective surgery restrictions and disruptions caused by isolation orders and lockdowns across the country had hit earnings in the 3 months to the end of September. As a result, its share price tumbled by 4%. And Breville, the sandwich maker and coffee machine group, said it was facing supply constraints and delays at ports, which were hindering its ability to meet customer demand. Logistics processes that used to take 1 week can now take 4 weeks. Incredible the way that the pandemic has hit different industries.
Yeah, it certainly is. And I'm sure that would be worrying you because I know you've spoken before about how big a fan you are of your Breville sandwich maker.
Absolutely. One of my favourite companies.
Indeed. Now, another company, Sean, that has been hit by COVID is explosives manufacturer Orica. It made a $174 million loss in the year to the end of October.
Yes, basically the slowdown in mining activity as a result of the pandemic hurt Orica. China's ban on Australian coal imports didn't help either, and also it suffered from soaring costs of ammonia, which is actually a raw material for explosives. Now, miners weren't digging as much stuff out of the ground and therefore didn't need as many explosives. But boss Sanjeev Gandhi was really upbeat about the outlook, saying momentum had picked up. He was confident that demand for explosives would improve, particularly in copper and gold mining and the quarry and construction markets. There are still inflationary pressures, but Orica, which is a global company, has been able to shift some parts of its business to low-cost countries. Many back-office functions, for example, have gone to the Philippines. Orica is one of the world's biggest explosives companies, but it's had a hard time of it, and its share price is down almost 40% over the past 2 years, including almost 4% yesterday.
And Sean, another one, market darling Xero's share price took a decent tumble yesterday as well.
Sure did. Xero has been very popular among investors, but the cloud accounting software company made a loss for the 6 months to the end of September as it spent more on sales, marketing and product development. Investors didn't like the result and dumped the stock. It closed down more than 6%, but unlike Orica, Xero has been a favourite for the past couple of years. It's actually up almost 80% since November 2019.
Okay, Sean, what's making headlines in today's news media?
Well, The Australian is reporting that Joe Biden's National Security Advisor, Jake Sullivan, says the US is moving swiftly to implement the AUKUS security partnership, describing the pact as an investment in collective security while rejecting claims of a new Cold War. And there are many media outlets reporting that Xi Jinping has become the most powerful leader of China since Mao Zedong, after being endorsed by the Communist Party Central Committee for a third 5-year term.
Running through some of the other stories around today, Nine Entertainment says profit is tracking at about 10% higher this financial year than last financial year. Both free-to-air and publishing advertising are performing better, according to CEO Mike Sneesby, although the strategy is still to push further into digital properties.
GrainCorp said it made $139 million in the 12 months to September after making a loss the previous year. High demand for grain, oilseeds and vegetable oils alongside a record East Coast crop helped the bottom line no end.
The independent experts report into the Santos Oil Search merger says Oil Search shareholders face a material loss of value under the $21 billion deal. But given the need for large clumps of capital spending in coming years, the merger is the best option. The report says Oil Search shareholders will get 38.5% of the merged company, but are contributing 43 to 44% of the estimated underlying value.
That's a really interesting one, that, because it's hard to vote for a merger when you actually think you're getting less than you should.
Yeah, interesting.
AusNet, which is under takeover offer, posted lower half-year earnings due to extreme weather events. The owner of part of the Victorian power grid said the group of storms in June was the largest event it had ever had to respond to. Canadian group Brookfield last month bid $10.2 billion for the company.
And Sean, infrastructure and terminals business Cube said it had been trading ahead of expectations and expects a strong bottom line for the current half year on the back of high agriculture and steel volumes.
I love the way you said Cube there, Michael. Can you say it again for me?
Well, it starts with a Q, so you must emphasise the Q.
Cube. Okay, off we go.
Okay, carry on. Shall we turn to overseas news, Sean?
Yes, let's. The news yesterday that China and the United States have made a landmark pledge to work together in the fight against climate change at the COP26 summit has been broadly welcomed. The two are the biggest emitters in the world, and they said they'll cooperate on emissions reductions, technology on clean energy and decarbonisation. Now, soon after the announcement, Chinese President Xi Jinping warned against letting tensions in the Indo-Pacific cause a relapse into a Cold War mentality. President Xi spoke in a pre-recorded video to a CEO summit at APEC, which is being hosted by New Zealand. And finally, Elon Musk has sold about $5 billion worth of Tesla shares, in part to pay a tax bill. He still has about $195 billion worth of shares. The sell down is presumably part of his response to his Twitter poll over the weekend, where he asked whether he should sell 10% of his holdings. The response was yes. It's the first time Mr. Musk has sold any Tesla shares in 5 years.
I think that's the third time we've spoken about Elon Musk this week. How much Musk is too much Musk?
Oh, can we go on, please?
Yes, we can. Up next, Sean, is the Daily Interview, and today you're speaking to Patrick Coughlin from Creditor Watch.
Yeah, Creditor Watch is a great collector of data and able to look at the information and make predictions about what's going on in different sectors of the economy. Patrick explains all that really well. Very interesting interview.
Yeah, it is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 12th of November, 2021. Make sure you're following the podcast. Join us online on Twitter, on LinkedIn and Facebook. And don't forget to head to fearandgreed.com.au and sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.